Welcome to our audiences across all of our Bloomberg platforms. Here on a very, very busy afternoon, Carol Massar, we get a slew of earnings after the bell, including from the granddaddy, Apple.
Yeah, and I'm looking at stocks selling into the close here. We're still green across the screen, but we're moving down towards our lows of the session. Amazon, Tim, up about 3% ahead of earnings. Apple, it's been pretty little changed. Yeah, it's just up about 1/3 of 1%.
I'd said yesterday was one of the busiest days for S&P 500 companies. Today is actually the busiest. 62 companies worth a combined $9 trillion in market value. We've heard from some of them, but Amazon and Apple are the ones that we are focusing on in the next few minutes.
And it feels like after this, it's kind of, after the climax, we'll get NVIDIA in the coming weeks, but from here on out, it's really about listening for any kind of progress on trade deals. By the way, the Magnificent Seven and the NASDAQ 100 are now above their levels pre-Liberation Day. The S&P 500 getting ever so closer to wiping out those losses.
Just tripping when it comes to all of April. But guys, how much of this is short covering mechanical buying versus fundamental buying? And I wonder if we'll get any clarity on that after we open tomorrow.
Yeah, I am curious, though, about the earnings, particularly out of Amazon and Apple. We talk about everything that's gone on with the trade wars here. Two companies really at the center of that. And, of course, also two companies that have shown resilience through past economic travails. An eighth day of gains for the S&P 500 off the highs of the day, but a close, it looks like right around that 5,600 level as we wait for these numbers to settle. That's a gain of more than 30 points or 0.6%. The Dow Jones Industrial Average higher by 74 points or 0.2%. The NASDAQ Composite is out front on the back of those big results out of Microsoft and Meta. A gain of about 264 points or 1.5%. The Russell 2000 lagging slightly here on the day, up, but only about 0.6% on the day.
All right, quick check on the S&P 500, about 208 names to the upside in today's trade, 293 to the downside, guys, 2 unchanged.
All right, a quick look here at the IMAP. All the sectors related to big tech, infotech, communication services, consumer discretionary, they're leading the gains, each up by at least 1%. In terms of the weak segments of the market, you've got healthcare, of course, a clear defensive sector, down 2.8%. Consumer staples and materials, each down about 0.5 to 0.75%.
Well, just a quick check on yields as well. We saw selling pretty much all across the curve and the front end in particular. And the question was why? And no one seemed to know why. I talked to Ira Jersey, Bloomberg Intelligence is like, I don't know. The ISM manufacturing wasn't great, but it was a little better than estimated. So maybe it was that. Guys, Amazon's out.
All right, let's get to Amazon. That's crossing the wire right now. The company basically saying that in its most recent quarter, it did see net sales. I'm going to start with the bottom line here. So operating margins coming in at about 11.8%. That does appear to be a beat. EPS on the bottom line also appears to beat at $1.59. The street was looking for $1.36. Sales coming in at $156 billion, roughly in line with estimates. Here is your forecast. The company says that for the second quarter, it does expect to see net sales in a range of $159 to $164 billion. The street on average was looking for about $161. So the bottom end of that forecast is below what the street was looking for. Similar story on operating income, and the guidance on the EPS side, also a similar story as well. The company saying that it sees an impact of about 10 basis points from FX, given some of the moves in the dollar as well. Those are the headline numbers here. You see the knee-jerk reaction, guys, down about 3.6%.
Yeah, the second quarter operating income coming from between $13 billion to $17.5 billion, when the estimate was for $17.82 billion. That was a huge miss there. A lot of questions are going to come up about who exactly is absorbing the higher costs of what is coming from China in these goods that are sold to consumers, especially in the wake of what happened earlier this week with the back and forth between Amazon and the White House after that Punchbowl News report. But I think a lot of questions about tariffs on this call.
Yeah, absolutely. And I was just kind of doing a quick look through the press release. I don't see really any commentary so far on it, but it's going to be about that, right, in terms of their costs and certainly what they're seeing with consumers, maybe in terms of buying ahead of it or what kind of slowdowns they might be seeing already.
And that's so interesting, given that so many people are saying that this is kind of the poster child for a company that's really hit by the tariffs in so many different ways. Yet you look at the commentary in the press release from Andy Jassy, talking about being pleased with the start to 2025, citing all the different things that they're working on, Alexa Plus, the new Titanium 2, Tranium 2 chips, Prime members expecting speed delivery records. It's as if it's any other quarter when we all know that there's so much in the balance.
Well, that's what was so interesting about what they said about tariffs. It was mentioned once in the press release, and it says, our results are inherently unpredictable and may be materially affected by many factors. They talk about the FX rate, changes in global economic and geopolitical conditions, tariff, trade policies, consumer demand, and spending, including the impact of recession fears as well as inflation. I mean, take that for what it is. Like, you have an outlook, but that's a material set of risks.
But that's like fine print at the bottom, right, about the financial guidance. And I'm
It's
wondering
part
if
of the
that's any different
boilerplate
than
at
it would
this
be
point.
3 months ago.
Yeah, that's exactly like kind of the kitchen sink there of everything that could impact
But what are
it.
analysts interested in, and what are we interested in? That's what's going to be asked on the call later.
And they're going to be asked, and I think the two things coming into this that we had talked to a lot of people about was that we know we're going to see a hit with regards to the e-commerce side of the business at some point in the future. The idea is AWS and some of the other services that they sell, can that hold up? So when you look at the growth of AWS in the most recent quarter, 17% growth, that's great. It was in line with estimates, though it's not materially different than what they had in the year ago period. Similar story for some of their other units here. You're not seeing an acceleration in that growth coming into this environment. So that's going to raise a lot of questions as to what these numbers look like for Q2 and beyond.
All right, guys, just to kind of recap, because we are seeing shares of Amazon down, kind of deep selling, almost 5% here in the aftermarket. So staying near the lows in the after hours. Again, the key line sees second quarter operating income, $13 billion to $17.5 billion. Quite a gap there. Estimate on the street was at $17.82 billion. And again, as Romaine mentioned, Amazon guidance sees impact of about 10 basis points from FX. But we really want the commentary and what they are going to say about the retail business. Really important in terms of tariffs, because it's been an interesting week already in terms of speculation about the impact for Amazon.
And just in terms of the outlook here, just to put a more fine line under it, the second quarter net sales number will be $159 billion to $164 billion. Analysts were looking for, on average, $161.42 billion. I bring up the top line here because a couple of analysts have said that you really want to look at the top line. It's a pure read on what kind of issues a company faces, as opposed to the bottom line, where you can, decide to factor in different things, and you can figure out how you want to do accounting with expenses, with R&D. So you can tweak that as you want to, essentially.
All right, let's get to some other earnings. Several crossing the wire right now. Airbnb shares down about 3%. They are mentioning tariffs. They are actually lowering their guidance and making it clear here that there are some challenges ahead. They're giving a weak outlook, basically saying that growth for the main metric that basically tracks nights in experience, that's expected to moderate from the 7.9 number that they had in the first quarter. They did not actually say what that new number would be, basically just moderation from the first quarter. And they've made it clear that they've seen relatively softer results in the past few weeks, and they expect that to continue in the weeks ahead.
All right, guys, just want to hit Instacart for a moment, because the first quarter appeared to do fairly well, and then we'll get to the outlook in a moment. So first quarter revenue, $897 million. That beat estimates. A gross transaction value, that's the key metric for them, is $9.12 billion. That wound up beating estimates. Looking at the outlook, that same number, that gross transaction value for the second quarter, looking anywhere from $8.85 to $9 billion. Orders for the first quarter coming up. Pretty rosy outlooks, guys. Best order growth for this company since 2022.
All right, Instacart to the upside, not the case for Block. It is dropping like a rock, down about 10% here in the after hours. It's down more than 30% year to date. The company cut its adjusted operating income guidance for the full year. The guidance missing the average analyst estimate. Here's the numbers. For the year, adjusted operating income of $1.9 billion. It had seen $2.1 billion. The estimates for $2.13 billion. Company sees gross profit of $9.96 billion. The estimate above that at almost $10.2 billion, and sees adjusted operating margin of 19%. Had seen 21%. Again, continue to see Block down about 10% in the aftermarket.
All right, and let's just take a look at Reddit. The stock is surging in after-hours trade after its second quarter revenue forecast topped analyst estimates. But if you look at the quarter that ended, that was a huge beat as well. Just to give you an idea, the average revenue per user, $3.63. Analysts were looking for $3.44. For this quarter, the second quarter, it is saying that it sees revenue from $410 to $430 million. Analysts were looking for just somewhere in the neighborhood of $393 million. So that gives you a sense of the scope of the beat here. And again, Reddit surging right now after posting this big beat.
I'm looking at Atlassian, shares of Atlassian, ticker TEAM, down close to 15% at this point. Fourth quarter adjusted operating margin came in just shy of estimates at 22%. Fourth quarter adjusted gross margin coming in above estimates at 84.5%. The company's shares are falling post-market. Fourth quarter cloud revenue year over year up about 23%. Third quarter revenue for the most recent quarter up $1.36 billion, just above estimates of $1.35 billion. Shares continue to move lower, down 16.8%.
Roku also out with earnings. The shares had been higher. They've been oscillating between gains and losses. First quarter revenue did rise 16% in the quarter to about $1.02 billion. That matches the average of analyst estimates. Bottom line numbers also match the average of analyst estimates. However, the company did say going forward for the second quarter that its revenue might come in a little bit light. It's projecting revenue for the quarter of $1.07 billion, just a touch below what the street was looking for. It also gave gross profit guidance of $465 million, also a touch light from what the street was looking for, and adjusted EBITDA, Scarlet, of $70 million, or Carol, which is also a touch light from what the street was looking for.
All right, a lot of earnings. Just to recap, Amazon continuing to be down more than 4% here in the after hours. Again, seeing the second quarter operating income $13 billion to $17.5 billion. Estimate on the street is $17.82 billion. A lot of earnings, folks. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We know, Alix, you're heading out. Scarlet and Romaine, of course, continuing out there on Bloomberg Television, and Tim and I continuing right here on Bloomberg Business Week Daily. Thanks, guys.